We'll shift focus to the commodity markets. Manisha is standing by with what is top of mind. There was a bit of profit taking across industrial metals. Is that continuing, Manisha?
It definitely is, yes. Most of the metals have opened the Asian markets on a weaker side. Actually started with New York session yesterday after we saw the US Fed minutes come in, where there is not enough push for the rate cuts given the current inflation background is the statement that we saw coming in from that meeting, and that has weighed onto the market. What it also has done is that it has strengthened the US dollar index, which is always not well for the dollar-denominated commodities. So if you look at the gold prices, we've come off the all-time highs, 1.7% of a decline overnight. Silver prices fell nearly 3% as well. But the deepest of cut clearly came in for copper. Remember, we were trading at an all-time high for this one, nearly 4.5% of a cut overnight. But the copper prices still are around 28 to 30% higher in 2024 so far. I want to talk about copper some more because here we've seen prices fall almost up to 4.9 from an all-time high of 5.2, which also was a level that the copper prices made within this week itself. Now, the near-term demand in China clearly has been on the weaker side. We've been talking about that. The run-up always was speculative, thinking that a long-term or a medium-term demand is something that perhaps will not be able to meet. So when you look at the LME copper prices, we've seen all-time high of 11,104 onto that. Currently, we are trading below $11,000 a ton onto that one as well. Now, when you look at the supply concerns, markets are looking at a longer term onto that one. If you look at the China inventories, those also have surged to nearly 4-year highs, and that's weighing onto the Shanghai copper prices also right now. More interestingly, there are a lot of short squeezes that we saw when it happened on COMEX or CME for that matter. But there are reports that nearly 100,000 tons of copper is en route right now to CME exchanges to ensure that all the short positions that were done, bearish positions that were done, the delivery for that is coming into the markets. And that is what has also led some premium of those prices. Also, when you look at the COMEX positions itself, the speculative net long stands at 72,000 contracts, which is 0.8 million tons. Now, this is speculative net longs. When you look at the producer net shorts, well, that clearly is a longer number of almost 1.04 million tons. That also is a mismatch that the markets are right now digesting within there. When you look at the Chile and various other producers, well, we are looking at 20,000 tons from Chile as well, which is en route to US by the end of May. And there are larger shipments actually which are in pipeline for the month of June and July. So copper clearly looking at all of this copper moving around the markets, and that is what has led to some profit taking. This is a statement that has come in from International Copper Study Group, which says that copper will end this year and the next in surplus as well. There is that much material that really seems to be coming in from warehouses for the market. So the run-up that we've seen in many of these metal prices, perhaps we've seen the high for a very, very near term. This is what we've done in matter of last 24 hours, really, in sense of prices. Now, this is a high that most of these metals have made it in this week itself or for the month of May. But currently, when you look at the prices, we've come off those kind of prices. All-time high for gold was 2,450. We're trading at 2,370. Silver as well, $2 has been shaved off. And that's exactly what we have seen for other metals. So whether it's zinc, aluminum, nickel, we're off the kind of highs that we made for 2024.
Okay, thanks a lot for that. So big moves coming into the commodity space, and also, by the way, in the markets, a lot of stocks are moving around. So on the